Well, the cost of fuel has been making news all around the world for weeks now as petrol and diesel prices hit multi-year highs amid tight supply. And in response, a number of oil-consuming nations have decided last week to release oil from their strategic petroleum reserves in order to lower the high gasoline prices. South Korea, the United States, United Kingdom, India and Japan are among these countries. But the question is, will the move be effective? For this, we are joined by Melvin Matthews, advisor to OrbitMI, and Jeffrey Halley, senior market analyst for the Asia-Pacific region for OANDA, who is based in Jakarta. Very warm welcome to you both. And, well, we've got a lot of questions today, and let's start with you, Melvin. Now, first of all, why have consumers been seeing this significant rise in retail petrol and diesel prices?
Good morning, So-Young. To understand the significant rise of petrol and diesel, we have to first understand how crude oil has performed since the pandemic. Now, early travel restrictions due to COVID-19 brought to a standstill almost all modes of transportation, with flights grounded and people not traveling to work. The consumption of petrol and diesel has drastically reduced. This has perhaps been the main reason that the WTI crude oil prices went into negative territory in April 2020. Now, the global crude oil prices have been increasing after the Organization of Petroleum Exporting Countries, or OPEC Plus, has decided to continue supply curbs. And around this time last year, crude oil prices were around $45 a barrel. And since then, it's been steadily rising to over $65 a barrel in March this year, and followed by $75 a barrel in July this year. And the latest, earlier this month in November, about $85 a barrel. Since then, crude oil prices have tapered off to trade at just below $70 a barrel. This naturally has had a knock-on effect on higher retail and petrol, diesel prices at fuel pumps and gas stations. So wait to be seen what's next.
Well, Jeffrey, the White House has said that anticipation of the reserve tapping move has already helped bring down oil prices about 10% during the past few weeks. Would you agree with that? Do you think this SPR release is going to bring down the retail pump prices down in the short run?
I think there was a bit of a politicking in that statement. In fact, oil prices rallied by 5% when Mr. Biden actually announced the SPR, mostly because he had telegraphed the move to the market. Now, President Biden's actually limited by legislation to about 60 million barrels. He can only release more from the SPR after that if there is a serious blockage in the delivery of oil worldwide. We don't have that problem in the world. Oil is still flowing, it's still being delivered, it's just that it's costing more. So he's pretty much used most of his discretionary allocation already. I believe that most of the price falls, in fact, are due to last Friday's announcement about the Omicron announcement. We saw oil collapse by 10%. It's got nothing to do with the SPR. Also, the SPR itself, the release is more of a one-shot hit. So there won't be follow-on releases after this. So I'm expecting the SPR impact to be quite limited.
And Jeffrey, how do you expect the release to impact South Korea, where fuel prices have already been substantially cut due to lowering of taxes on fuel?
I actually believe that the fuel tax cut will have a more profound effect in the longer term than actually one-off strategic petroleum reserve releases. So I think the government's being very proactive in that, and it was a good policy to help with the South Korean domestic consumption recovery. But the SPR releases are more of a signal, I think, rather than a structural change in the market. What will be interesting now is, do oil prices remain low because of this new COVID-19 variant, or will they quickly resume? And I think there's a very binary outcome there.
And Melvin, would you agree with that? Would you agree that the recent lowering of oil prices over the weekend, it's been down more due more to the new variant rather than the SPR release?
Yeah, I think Jeffrey's quite right there. The sentiment is more driven by Omicron, and how that's going to pan out. Are there going to be lockdowns and quarantines and travel restrictions? I think the SPR is more of a signaling, a political signaling to the OPEC Plus, and will have, if at all, any impact. It'll be very, very short term.
And Jeffrey, well, it seems that this political signalling is quite important, especially in geopolitics. And well, South Korea and Japan, they're among the countries that are joining the US in releasing oil from strategic reserves. What's the significance of this coordinated SPR release between multiple countries?
Well, it's one grouping against the other. We've got OPEC Plus with all the world's largest oil producers, except for the United States, whose production has actually hit 11.5 million barrels per day at the moment, yet oil prices are still going up. And then we've got the world's largest oil consumers and importers in another group. So it's almost a signal of a buyer's strike. Whether OPEC Plus chooses to take that bait or not is yet to be seen. I think what they're trying to signal to OPEC Plus is maybe relations in the future. If they want to keep relations steady with their largest customers, then OPEC Plus needs to do more to manage oil prices. Now, whether OPEC Plus is going to listen to that is another question altogether.
Right, and Jeffrey, certainly OPEC Plus has been resisting calls to ramp up production, although they do have spare capacity, of course. Do you think, well, its members, they also say that there's likely going to be a surplus next year, and now it seems that their fears are maybe being confirmed by the recent surge of the new COVID-19 variant. What kind of discussions do you think are going to come about in their meeting later this week when it happens? Of course, this was postponed due to the surge of the new variant.
Well, there's a few things going on here. Iran and the other overseas powers are returning to the negotiating table. Iran has already signaled that it's looking to raise production to 5 million barrels per day if they get a good result from those negotiations. That will change the supply-demand equation, notably in the world. We've got this Omicron variant, which swept the world. This huge panic sell-off on Friday. I believe that the balance is now swung to OPEC Plus being more cautious here, and perhaps they'll put a pause on their scheduled 400,000 barrel per day increase when it's combined with the SPR releases as well, because we've seen oil come off well over 10% in the last couple of sessions. OPEC have actually been predicting there would be a surplus next year anyway. That's not in line with other forecasts around the market. So they've been rather more sanguine than other groupings or research houses about oil's consumption levels. But I do believe this week that it's now bigger than 50-50, that they'll pause and they'll wait and see what happens with this new variant, because they have signaled in the past, just about at every meeting, that the the COVID-19 was their biggest risk point, and that a return of a new variant could lead to an oil surplus due to the consumption side falling. So that's exactly what looks like is going to happen.
And Melvin, how do you see this? What kind of decision do you think OPEC Plus is going to make in their meeting this week when it happens, and how's that going to affect global consumers?
Well, OPEC has not made much money during the pandemic because the fuel prices were really low. But at the moment, the situation is quite dynamic. And for any analyst to make any reasonable forecast is not easy. I believe the OPEC might take a wait-and-watch approach to monitor the impact of the SPR release, because we must remember that the total strategic reserves of the OECD countries is about 1.5 billion barrels, and I don't believe that they're going to release all of that. But I do know that there were reserves that were put in place when the prices were low. But I think Jeffrey is right that the major impact that they're going to be watching out for over the next few weeks, at least, is how Omicron is going to pan out, and what sort of restrictions will be put in place based on that, because then that will impact how global trade and transportation will be affected.
And indeed, while global oil prices did fall on Friday due to concerns over the new variant. And well, Melvin, do you think that we're going to continue to see a downward trend in oil prices?
Well, I wish I had a crystal ball, but I think this is a difficult thing to predict. But I think in general, winter months see a spike in rates. But as winter eases off, there will be lowering rates is my expectation.
And how about you, Jeffrey? What's your outlook for the global oil prices? Do you think they're going to stabilize, or do you think they'll remain high or possibly get higher in 2022?
I think it's very much a binary outcome here. If this new variant of COVID-19 is as serious or more serious than Delta, and we see sweeping restrictions reimposed around the world, and governments after the Delta failure do look like they are shooting first and asking questions later, then that will impact materially on oil consumption and demand, and we'll see prices fall. Conversely, if we move past this new variant and it's not as serious as first thought, then I believe that the global recovery will quickly get back on track. That will increase oil demand, and oil demand will increase over winter as well. I think if we have a cold winter, given the elevated state of coal and natural gas prices, in that case, I think we're going to see Brent crude move back above $90 into 2022, but very much a binary outcome. At the moment, we're going to have to wait and see what goes on with this new variant of COVID-19.
Finally, before we go, Jeffrey, now for the Asia-Pacific region, where many countries are very trade dependent, how do you forecast recovery in this area? I mean, especially with this new variant, prompting fears in the region.
Well, much of Southeast Asia is still emerging, so they've been lagging Europe, they've been lagging China, they've been lagging North America in the recovery, mostly because of their very low or slow start to vaccination. So domestic demand is quite fragile in most of Asia at the moment. A new COVID wave leading to these global shutdowns and impacting global trade would be quite a strong headwind for Asian markets into the first quarter of next year. But again, we need to see how this evolves in order to make that call conclusively.
Well, I'm afraid we'll have to end the discussion here today. That was Melvin Matthews, advisor to OrbitMI, and Jeffrey Halley, senior market analyst for the Asia Pacific for OANDA, who is based in Jakarta. Thank you both so much for your time today.
Thank you, Sion.